This is going to be the greatest wealth creation period of your investment lifetime. Hear me out on this one. I'm talking about AMC, but I'm also talking about the next 1 to 2 years. Hopefully not longer than that. If you got a long-term outlook, great, but that's kind of what I expect over the next year or two. Now, we're going to get into this because I think this alone, this one video, could provide you guys such an immense amount of value that I must make it, even if people don't want to hear about it. Even if people are only into trading or doing this and doing that, this is something that everybody needs to hear, because all I ever hear nowadays is the markets are going back to stupid low levels. Like, for an example, Dan Niles, he is a money manager. He says, by the time this is over, the S&P will drop 20%, which would be down to about 370 on the S&P, about right here, which is not too far off where we were just at, or potentially as low as 50% from the peak. 50% from the peak is 239 on the S&P 500. That's absolutely ridiculous. And that would almost be the crash of 2020 levels. Now, could it go down there if people all freaked out and shit just hit the fan and something happened? World War III started. Sure. I mean, we would be in a pretty bad overall situation if the S&P dropped 50% from its peak. No, that's not the point of this video. It's not the point of trying to predict where it will go. But what I will tell you is that every time we've seen a V-shaped recovery, right? I don't know if you guys were invested in the markets during 2020, but everybody talked about this K-shaped recovery. The K-shaped recovery, that's what you always heard. But what did it turn out to be? A V-shaped recovery. You went down a lot and you went back up. That's where you get the whole V from. That's what happened in 2018 as well, a V-shaped recovery. That's what has happened ever since 2008. Anytime there has been a major drop, what has happened? There's one common denominator. The Fed has stepped in and saved the day. Well, they're not going to do that now. They're not going to do that now. And that is why stocks have gotten absolutely beaten into the ground. And I kind of want to use AMC as an example here of how you can kind of look at the economy. On the one hand, for people that think the stock market will never hit a new all-time high, that's absurd. I actually heard an analyst say this exact quote, and I'm going to paraphrase it back to you guys. And if you guys have heard it already, great. If you have not, great. You can hear it again. But essentially saying, if you don't think the stock market will continue to grow, you are betting that American industrialization, technological advancement is going to stop, and we are at the peak of essentially evolution technologically of the human race. And I personally am not willing to make that bet, because I think 20, 30, 40, 50 years from now, you're probably going to have robots cleaning your house. You're probably, by then, maybe have flying cars, right? I'm not willing to bet that that is going to be the case. So the question is not, is the market going to go back to all-time highs? Are these stocks going to recover? It's how long is it going to take? And that's the beautiful thing about right now. In a V-shaped recovery, in a V kind of crash, call it that, where markets just sell off dramatically and then bounce right back up, what's the difference here? You have a very short amount of time to buy what you want to buy, and then you instantly see pretty much instantaneous gratification. Instantaneously, I mean, during the crash of 2020, I bought a lot of recovery stocks. I bought just everything, and those stocks went up like 100% within a month and a half, which is cool and all. Like, I'm not going to complain about that, but whatever cash you had at the time was basically all you could have put in, right? Pretty self-explanatory. You don't have a lot of time to build out these positions. Well, the Fed is not our friend right now. The Fed is your enemy. So we've established that the markets will eventually come back. But when the Fed is not your friend, it can take quite a while for the markets to come back. And you see stocks specifically like AMC, like DraftKings, like Fubo TV, like Square, like PayPal, and a lot of other companies, right? Shopify, Spotify, Tesla, A lot of companies that are solid companies, solid balance sheets, that are not really in financial troubles, and that are going to be massively bigger companies in the future that are trading at severely discounted valuations compared to what they will be in the future. So during this next year or two, what I'm personally going to do is acquire as many shares as possible. This is really a terrible market to be trading in. The volatility is super high, premiums are super expensive, so even if you do catch a big move up or down in the markets, you're only going to make like 100% on a lot of these options unless you continue to ride them out. And then in this market environment where stocks can be up 1 to 2%, down 3 to 4% the next day, you're taking a lot of risk holding things overnight. So it's not very attractive to be doing a lot of trading here, especially swing trading is virtually impossible. Like, you really haven't strung together 2 positive days, or like you've strung together negative days, but the premiums are so high. Long story short, this should be really the acquiring phase, because eventually when the Fed does U-turn and accommodate the markets again, if you had the last 1 to 2 years to acquire massive positions in a lot of these great companies, then you're instantly, or within the preceding, couple of months, that's when you're going to make a lot of money. And just for an example here, if you make $80,000 a year, or we'll just call it, round it to $100,000 a year, if you could even save 30% of your income and invest that for the next 2 years in a lot of these, depending on what your strategy is, obviously different risks to rewards, but if you're invested in the SoFis, the Squares, the PayPals, the Teslas, the Shopify, Spotify, AMC's, DraftKings of the world, Lucid, Polestar, these players, right, that are going to be hopefully much bigger companies in the future. If you just save 30%, invested $30,000 for the next 2 years, that's $60,000. It is very possible that could turn into $500,000 or potentially $1 million, say 3, 4, 5 years from now. And that, I think, is the biggest opportunity in your lifetime. And I wanted to use AMC as an example here, because think about where AMC as a business has been over the past 2 years. Not in such a great place. Whereas the market's been in the last 2 years in a much better place. Well, why is AMC going to do so well fundamentally now? It's because when you are forced to lean down your business, to really cut back and make sure you will survive a hard time, you got to shut down money losing locations. You got to start becoming a lot more efficient. You got to do what you have to do. So when the situation turns around, COVID lockdowns end, and now your business can operate more normally, well, you're in a much better place. You're in a place where you've leaned down your operations. You've cut costs wherever you could, and you're not going to go back to that old you that had money losing locations for 20, 30, 40, 50 years. And that's what AMC had. There's a lot of fat on a business that's been around over 100 years. So they're in a much better place now. While the markets are the exact opposite right now. Over the past 2 years, things have been great. Now, heading into the next year or two, things might not be so great. But what I will tell you is that when the markets come out of it, you're going to see a lot less leverage. You're going to see much stronger financial conditions, and you're going to see more appropriate and more discounted valuations, like what we are already seeing, but potentially could get worse by the time this whole thing is said and done. We're going to be in a much better place a couple years from now, and the markets are going to be on a lot more stable foundations, all things considered, as long as we don't get like a nuclear war or another pandemic or something along those lines. Granted, if things just remain steady, we're going to be in a very good place, and this potentially could be the low of your lifetime, the low that we set in 2022 or 2023. If we go down to 360, 300, 240, if it's a 50% drop from peak to trough, then that's probably going to be the low for your lifetime. I doubt that we would ever revisit these prices after the markets do get on solid footing. The Fed, their rates are going to be in a more normal place. The balance sheet's going to be a lot smaller, right? It's going to be very, very good. And hopefully you guys get the gist out of this video that Personally, right now, I'm going to put a lot more money to work here over the next year or two. And by the time this thing is all said and done, by the time it hashes out, you're going to be in a much better place. And I'm not even saying you should look like 10 years out, which you should. You should look 10, 15, 20 years out. That's how I personally invest, right? But if you just look 3, 4, 5 years out, if you can acquire for a year or two straight, just going crazy buying stocks, not too much on leverage. Don't twist my words here. But you'll be doing very well in the next, say, 3 years. Go back to 2019, fast forward to today. It hasn't been that long in the grand scope of things, or at least to me, it doesn't feel like it's been that long. So that's kind of the gist of this video. Take this time to really buy the dip and secure yourself for the future. So that is going to be all for this video. Hit that like button, subscribe to the channel, source comments, questions, or concerns down below in the comment section. If you guys want access to everything that I am buying, selling, trading, investing in for the long term, for swing trades, whatever it is, link down below in the pinned comment to join that and get yourself those free stocks down below in the description with Webull, Moomoo, and Public. It's always a good thing to have multiple different brokerages in case something happens. You have money here, money there. It's always a good thing to have money in multiple different places. And all of those brokerages, Public, Webull, and Moomoo, they give out great stocks, so definitely check that out. So thank you guys for watching. I hope this video provided you guys some value. You leave your thoughts down below in the comment section. I will see you in the next one.